Hey there, good morning, folks. Happy Saturday to you. Happy New Year. How exciting is this? We get to start out a new year. I hope everyone had a wonderful holiday. Uh, I was, I got up yesterday. I had all these plans. It was a late night for me. I'm not going to lie. Had some good friends over. Had a great time. Probably drank a little bit too much and was feeling it yesterday. So I'm really kind of glad I didn't do my videos yesterday because, quite frankly, my head was a little cloudy. I'm all better today and much more focused, and found some really interesting things going on in the markets, and some really interesting action on well, not Friday, but Thursday. So first thing we want to do, let's go take a look at what's going on in the markets. And, unfortunately, we did not get our Santa Claus rally, or at least we got more action of what we've pretty much seen all year long, which is, just kind of trading in a range, some choppy action. Um, and, we kind of robbed the Santa Claus rally coming into it. We talked about that last week. So wasn't a real big surprise that we didn't get a full-blown rally into the end of the year. We'll see how these first couple of days act as we go into the new year. But look, a big deal made about the fact that the S&P closed down, Nasdaq I think closed up, but I don't think it's as ominous as everyone is making it out to be. But we'll see. I mean, uh, we've kind of gone over these charts last few weeks, talking about the fact that yes, it's been a very choppy year, and it's been a consolidating year, and it could be distribution. It could also be building a base, right? We have a lot of stocks within the market that are below their 240-day moving averages. We've had a very narrow band of stocks that have held the markets up, and they showed some weakness. And the question becomes, if those stocks roll over, is that going to take down the market even more? So the stocks that are already down 20, 30, 40, 50, 60%, some of them, does that mean they're going to zero if if that narrow band of stocks winds up rolling over, or is it just a possibility that things could shift from that narrow band into some of these beaten up names, right? And I think that's something to think about. I mentioned a few weeks ago that we've already had like a stealth bear market happening in a lot of stocks. So it's going to be an interesting year. And I'm not trying to make any predictions. I'm just saying, keep your mind open to the possibilities of what may happen. Okay, so let's just go ahead and start taking a look at what happened. So it was looking pretty positive. We actually broke above this short-term resistance line in the Nasdaq, and we're unable to follow through. Now we've actually broken back below it. It looks as though maybe we're going to come back down here and test this shorter-term trend line. But we've talked about this before. Let's take a step back. Let's look at the weekly. And we know that this is the dominating upward trend of the market, right? We remain in a dominating upward trend. And we can come all the way back here and still remain within that trend. It's when we break this trend line that things would start to get really scary, right? So NASDAQ, yes, we can pull back quite a ways. And look, I'm not going to lie. There are some charts out there that just do not look good. I mean, there are some signs out there that things could get worse before they get better. So NASDAQ, let's see how we react when we get down to this trend line here, right? The shorter term, and we've got the 200-day moving average here. We've got the volume weighted average price here. So a lot of stuff going on right here at this spot. If we do break down, where do we look at? We could potentially come down to probably somewhere around in this 4,800 area. If that breaks down, then we're looking maybe coming back down to retest these lows, 4,560 area. Let's take a look at, we can look at the Dow Jones Industrial Average. It's a very narrow band of stocks. It's the same thing as Nasdaq, and we are basically have a little bit of a short-term downtrend here. Every time it comes up into this resistance, it seems to fail and pull back, and it did exactly that last week. Now we're going to come back down and most likely test this area here, this short-term trend line, and see if that holds. If it doesn't, we're likely going to come back down to the next area of potential support, somewhere around this 16,640, somewhere in that area. Let's take a look at. I can't wait to show you guys the thing that I saw. And I'm so glad that, like I said, that I didn't do this video yesterday, because I wouldn't have caught it. I was just too cloudy. IBB, is certainly flirting with this very important area. It did look as though we were going to take it out here, and we were unable to break through with any kind of conviction and get some follow through. But I do like the action that it's doing here. I mean, we're consolidating, and it keeps tapping this wall, right? Trying to get through, and hopefully at some point we bust through with some conviction. I think that would be good for the overall markets. This is one of the only positive things that I can see in the markets right now is the IBB. Let's take a look at the IWM. There was a little bit of a cause for concern with the action that it had. And last week we talked about this little double tap down here. It kind of had a little W pattern going. And it would have been nice to see it come back up and test this trend line. It was unable to do that. And, the IWM has been weak really for almost all the whole year. So, but the question becomes, does the IWM stay weak, right? I mean, if you've got a majority of the stocks that are in that index that are already down 20, 30, 40%, and a lot of that, you got to understand, it has to do with a lot of the high yield names, right? The high debt names, small companies. I mean, they're in debt because they're small and they're growing, but they also grow the fastest, But a lot of oil and gas names are in the IWM, and that can really explain why so many of them are so beaten down. Does that mean that every small cap has been beaten down deserves to be beaten down? I probably am not leaning in that direction. I think that there are probably some decent value plays within that space, besides the oil and gas sector. So very interesting to me. Look, I know that we've got a downtrend. We've been in a downtrend in the IWM. We're basically coming back down to this little short-term trend line right here. If we break that, we likely come down and retest into this 107 area, right, which has served as support. If we break down below the 107, we're likely coming down to retest this low back in, what was that, October, come back down and retest that 103.63 area. But let's back it out and take a look at the weekly. This does not say to me that we are, entering a bear market. I mean, what it says to me is, look, we've had an unbelievable run, and now we're consolidating a bit, and we can still come back down and test this trend line before we make another move higher. I mean, if we lose that trend line, things get scary. But for right now, I am not in the camp that we have an impending market collapse on the horizon. Doesn't mean we can't have a significant pullback. Doesn't mean things can get pretty scary. They certainly could. Even if we just broke down below here and came down and tested this trend line, it would be that would be a scary move in the market. A lot of people would be panicking. So IWM, like I said, let's back it to the daily. It is weak. it looks as though we're going to come down and test this trend line. Let's see how we react there. Let's look at transportation, another one that a sector that does not look healthy. Which I find it interesting that the transportation sector does not look healthy when you've got the oil sector that's gotten so beaten up, and you've got oil that's gotten so beaten up, and that's their largest input cost. But it does not look healthy. Looks as though it wants to come back down and test this 132 area. If it breaks below 132, it could get a little bit concerning, right? We are getting close to testing its long-term trend to the downside. Let's take a look at mid caps real quick. Back to the daily. Oops. So you look here, right? It kind of, what's the first thing that kind of sticks out at me? Well, this could be a potential double top, right? I mean, but you can find all kinds of patterns within patterns. So there, yeah, potentially is a little double top there. We tapped it. We're pulling back, and I think that's the neckline or something right there. We could pull back in the mid caps, right? Let's take a look. Let's back it out to the weekly. However, it is still in an uptrend, right? We can come down quite a bit of ways before we break the uptrend, but it is a little bit sloppy, and it looks similar to the small caps, right? There's a tremendous amount of stocks that have already been beaten up significantly within that index. The question is, how bad will it get? Or could that be potentially where some money starts rolling over into? I mean, that's something that we have to be at least contemplating. Let's see here. So let's go back to the daily. Gold and gold miners, every time you think that they're going to catch a little bit of a bounce, they wind up just doing a complete reversal. I still think that it's something that you want to pay attention to. You look, one of the things you're going to want to pay attention to is the strength of the dollar, and if the dollar goes on a rip roaring to new highs, then there's going to put even more pressure on commodities and commodity related stocks. If the dollar weakens, that's going to likely be good for the commodities, so pay attention to that. Let's take a look at social. We have this little short-term upward trend. It's been consolidating a little bit. It did close below this on Friday or Thursday. We'll see if we get any more weakness in social. SMH is not looking good. We talked about SMH last week. It looked like it was kind of stalling out. We've got a short-term resistance trend line here where we keep kind of coming up, and that's where we fail. We failed here, and now we've broken down below this trend line, looking like we're going to come down and test the 200-day. Or no, wait a minute. I'm sorry. We're already below the 200-day. We're going to test this trend line here, and I think that's the long-term trend line. Okay. It's a shorter term, long-term trend line. I mean, our really long-term trend line from 2009 is here. But we had a little short-term trend line here that we're coming up to. It looks like we may test it as well. But let's back up to the daily. So, the place that we really want to see hold as potential support is right here in this 5270 area, right? I mean, it's tap, 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 tap. I mean, this is held as support and resistance several times. If we lose that, it could get ugly in the SMH. And, we talked about it last week. We said, look, I didn't like this volume pattern down here, right? It really seemed like there was some distribution going on. But what's interesting within that sector, though, is there's been a lot of merger and acquisition activity. So it's kind of interesting that SMH, we'll see how it reacts, but we may have some initial weakness in the beginning of the year next year. I think it's worth paying attention to. If we lose this 5270, the next area of potential support, let's take a look at that, get a little bit cleaner of a picture here. That 4770 area, right around there, actually the 4670, somewhere in that range. I mean, the real big time support down here at 3930, but this is 4670 area, which is, you know, pretty good drop. We go back to the daily. S&P 500. So, you know, we have this little short-term resistance, came up, tap, 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 finally broke out, looked like we were going to take it out, maybe go retest that 2100 area, and we failed. So, you know, now we're back below the short-term trend line, and we need to see. We could be coming back down here just to test this little trend line here, or we could be coming back down to test somewhere around the 1990 area in the S&P 500. If we lose that, we could come all the way back down and retest 1880. But let's back it out, take a look at the weekly. We've got a long ways to come down before we break the upward trend that we've been in. You know, bear markets, everybody is kind of talking about a bear market. We've been looking for a bear market and so forth and so on. Although I will say we did have an uptick in unemployment. I think that was one of the things that kind of put a little hurting on the market on Thursday. You know, when you start seeing jobless claims come in consistently higher, that is the indication that we are on the cusp of a potential recession. I don't see a recession within the next year. We're coming up into a presidential election. Things are going to get, I think things will be interesting, but I don't think, you know, maybe we see an exact duplication of what we saw last year, which was a whole lot of choppy action and consolidation until we have a clearer picture as to who's going to be leading our country. Okay, so S&P 500, we are looking as though we're going to come back and maybe test this trend line here. Be interesting to see if it holds as support. If not, potentially we come back down and test that 2000 or 1990 area. Let's take a look at that T2107, T2108. 200-day, remember this is a percentage of stocks above the 200-day moving average. And we came up into this little trend line, we tapped it, we're pulling back a little bit. Remember, the area that things get really, really interesting in this is this 1485 area. Could we come back down and test that again? Absolutely, we could. This is, you know, 28% of the stocks are over their 200-day moving average. And here is the 40 PMA, the T2108. Where things get interesting is when we get down to this 1344 area. That's an area that you would look to, you know, start covering up your shorts or look for potentially picking up some value plays for a long. So we had a nice little bounce. We're pulling back. 20, anything 20 or below, when you get below 20, that's where things start to get pretty interesting. This is going to be a fairly lengthy little deal because we are at the end of the year coming into a new year. So I think it's worth taking a real good look at things. USO, look, oil has been in a steep decline since we've seen some serious pain in the oil sector, right? clearly the dominant trend is down. And we've got a lot of work to do to start going back into an uptrend within the oil and gas sector. However, just looking at this, oil could climb a long ways, right, before it even comes into the resistance of the dominant trend line. I mean, you could have a pretty healthy climb within the oil sector or oil within oil itself before it even attempts to break the downtrend, the dominant trend. UUP, right, kind of consolidating is what it's been doing. It looks like it potentially is trying to break out. Look, if the dollar does break out with any kind of conviction, that's going to make things tough on the markets. So keep that in mind. Let's take a look at already looked at biotech. Home builders appear to be approaching an area of potential support. If this breaks down, things could get tough on the home builders. One of the things too, in a matter of time, real quick here, we're going to be right back into earnings season. So that could be a driver for the markets in the very near future. So keep that in mind. Volatility actually picked up a little bit. Let's see what else we got going on here. Materials sector looks weak. I mean, there is a tremendous amount of weakness out there. XLE is coming back up, right to this 58.99. This is held as support, basically $58. If this breaks below 58, things could get scary in that sector because then we'll be making some new lows. So we'll see if this holds as support over the next week or so. Financials, a little bit of a pullback, came right up into resistance, pulling back. Looks like we may come down and test this trend line. Industrials, very similar. Not a lot of indexes out there that look particularly healthy. But that doesn't mean that we have an impending crash on our hands. At least I don't think it does. We got XRT retail. We talked about retail last week as that it was one of the areas that was pretty concerning to me because it is absolutely testing its long-term trend line, right? Since 2009, we have a very clear picture, and it looks as though it's, it's testing this bad boy. If that breaks down, you're going to see some real weakness. I hate trading retail anyway. I try to avoid it at all costs. Seems like, throughout my investing career, every time I've tried to get involved in retail, I usually buy something right at the end of when it's hot, I mean, it goes from being the coolest stuff to wear to now all of a sudden it's like, the worst stuff to wear. If you wear it, you're an idiot. So anyway, and that's how that's how I build my clothing lines in my closet, my personal wardrobe too. Just kidding. Anyway, let's see what else we got going on. I think that's about it. Look, the markets are definitely sending out some warning signals. We didn't get our Santa Claus rally. We kind of stole from it as we came into the year. We'll see how the first couple of days for January are. But I'm going to show you this, and I was going to share that. I wasn't actually going to share this on this video. I was going to share it in the stocks to watch video. But I'm going to show you something that this is the first time I've seen this ever going through my scan. So, this is a 4% scan. And what it is basically a 4% scan. Anything that moved 4% or more on the previous day. And I just have to show you this because I would not have been able to. Let me see. I'll do this over here. Wouldn't have noticed this yesterday because I was in a cloud. But let's take a look at it. I want you to notice something. I'm just going to tab through all these names. Oil and gas, 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 oil and gas. 148 names, okay? And keep looking. Right up here is where I'm looking, okay? Where it's the description of the company. Oil and gas, oil and gas, oil and gas, oil and gas, oil and gas. There are a few other companies. Oh, and shippers, shipping and ports. Oil and gas, oil and gas, oil and gas, oil and gas, oil and gas. Okay, there's a biotech. Oil and gas. There's another bio. Oil and gas. I've never seen this, just so you know. And what I find so interesting about this is that, you know, I watch CNBC throughout the day. I watch Fast Money and all this stuff. And I heard repeatedly that hedge fund managers were not going to just go out and start buying oil and gas names because they're beat down. I heard that. I can't tell you how many times I heard that over the last few days of the year on different financial programs that, you know, they're not going to go out and buy oil and gas names just because they're beaten down. Now, I don't know if this was all retail trading, you know, all retail investors that were getting involved in these oil and gas names, but there is something that is extremely clear to me. There were a tremendous amount of individuals or people or anybody that was trading that on this day, let me put this back up. Oops. I got this all jacked up. On the day before the close for the year, there was oil and gas. That's what was moving. And, you know, a big part of it had to do with, hold on a second here. A big part of it had to do with this LEI. Right? LEI, oil and gas name. This thing went, I mean, they did some kind of deal on Friday and it went absolutely parabolic. Okay? So you need to look some of the, you know, see what's going on, see how much cash they have on their balance sheet, see what they have in debt, see what their cash flow is, and do a little more in-depth research than just taking a look at the chart. Okay, so be careful out there. I'm going to be back shortly with a list of stocks to watch for next week, and I actually am going to go over also a trade that I took last week and why I took it, and that's it. Okay, I hope you're having a fantastic year so far. It's going to get better from here. That's the way you have to view it. That's the way I view it. Every day is a gift. And okay, that's it. I will be back shortly with the stocks to watch video. See you soon.